Hey everybody, it's Will at VIP Mortgage, and it's time for a local lender update. Rates are improving. They have been for about the past week, and that is happening based on some data that I have already mentioned to you, which is weaker than expected job creation. In fact, we're not seeing job creation at all. We're seeing jobs being lost in the overall economy. And just today, ADP came out with their newest jobs report, and those losses were much higher, about quadruple what the initial estimates were going to be for September and October. So we're seeing some of this backward-looking data that we did not get when the government was closed, and those numbers are moving the bond market. That's probably going to be the story going into December as well. The initial third quarter GDP numbers are not going to be released. They're just going to skip to the final numbers, and that will be released on December 23rd. For the inflation reports that we should have gotten for September and October, those are going to come out on December 5th. The next Fed meeting is December 10th, and so some Fed members have been out talking about how they are definitely leaning more towards a cut in December than they were last time they spoke to the media. And I would not be surprised if they take a little bit more aggressive cut in December. Instead of the 25 basis points they've been doing, a 50 basis point cut is a possibility. I'm not saying it's likely, but it's a possibility. And I think the bond market is going to continue to move in that direction because we basically skipped 2 months of data. If that data comes in weaker and more negative as far as the outlook on the economy goes, then the Fed is going to be much more motivated to reduce interest rates to try to boost the economy as a whole. So a couple of weeks ago, I was expecting things just to skate sideways through the end of the year because there's not typically a whole lot going on. And there was speculation at the time that a lot of this data for September and October was just going to get skipped. It is probably going to come out, and it's possible that it's going to show a little more weakness in the economy than the markets were expecting, which may cause us to see a little bit more improvement in mortgage rates. If there's anything I can do for you, give me a call, 719-232-7553.